So calendar 24 marked the third term for the incumbent government, the Modi government, and that was the biggest high on the year, where the general elections, which were held in April and May 2024, gave the verdict once again to the ruling incumbent government. Thereafter, we saw actually the Sensex hit a level of 80,000 that was never seen before. The Nifty touched 24,000, which was never seen before. For the fiscal year 24, we actually saw 26-27% sort of a returns that came by for both the Nifty and the Sensex. Thereafter, we actually saw the budget come through, whereas the reiteration of the numbers that were given in the interim budget in the run-up to the elections were all reiterated, and markets were expecting that the continuity on the reform side would happen. But there was a bit of a disappointment, and that marked the lows, is that the earnings, which was the hallmark of the the previous 3 to 4 years, actually came to a standstill sort of a situation where earnings were very low in the first 2 quarters of fiscal year 25, that is to say the June quarter and the September quarter. In the beginning of calendar 24, we expected a double-digit earnings growth for the Nifty 50, which was closer to around 18%. But as we progress into the third quarter towards the end of calendar year 24, this number has got whittled down to 7 to 8% for fiscal year 25. So there has been a slowdown. Real GDP is also contracting, not contracting, is seeing a very slow growth as opposed to projected numbers of 7%, 7.2% that was given by RBI. We should be doing well if we clock 6.5% on real GDP. Nominal GDP growth for fiscal year 25 will be closer to around 11 to 12%. For fiscal year 26, we expect that earnings growth will be 10 to 12%, and similar number is expected to be there for the earnings growth for fiscal 27. So I think the low point currently is that there has been a slowdown in the real GDP. There is a slowdown in government expenditure. Corporate balance sheets have deleveraged. Government balance sheets are deleveraged. Household leverage is going up, and FRBM targets, which is Fiscal Responsibility and Budget Management Act, fiscal deficit will get reduced in fiscal 25. This means that the households today are feeling the pinch of reduced consumption, which we had seen post the pandemic, and somehow or the other, as we progress into the budget for fiscal year 26, there is an urgent need for the household consumption, and in that regard, the middle class to have an increase in income somehow or the other, whether it is on account of increase in current account deficit or increase in fiscal deficit, we don't know. The government has to decide that. And on top of that, the government has to continue spending, because the private capex is not coming through, and we expect that the continuity on government capex will only drive the real GDP going forward, and in turn the nominal GDP. So I think we look forward to fiscal year 26, as we begin the new calendar year 25 with a ray of optimism that the path of reforms are going to continue. Some bold reforms targeted by the present government will see the light of day in calendar year 25, namely some labor reforms, some electoral reforms, maybe some judicial reforms. These would be expected. We expect the earnings growth to see a boost through fiscal and monetary measures, and as we progress into the new year, US is actually progressing towards a new regime, and the entire globe is going to monitor the policy initiatives by the new regime, and India is not going to be left out of the policy measures from the US, both positive and negative, and how our policymakers actually shift the stance in terms of response to those policy initiatives by the US will be keenly watched out for. In a nutshell, we approach the new calendar year with a ray of optimism, of course, cautious optimism, because things are not hunky dory as things were, when the calendar year 24 began. We began on a very bullish note. Near term, there is a bit of a pessimism. Of course, there is hope that we will see again quite a bit of optimism because of a domestic centric economy for us. And with that, basically we end the calendar year 24 and look forward to calendar year 25.